Well, macros indeed are the focal point today, are they not? The Reserve Bank of India's monetary policy decision will be out today at about 10 o'clock. So what is the market going with? Latha is here with us. Latha, we were just discussing this yesterday. The equity market almost was, rallying in anticipation of some great dovish pause or something like that. But I don't think the bond markets were giving that indication, right?
Well, actually, it's all over the place at this point in time. And, equity markets react to a whole host of micro cues as well. And the positioning the day before. So we really don't know what was in the market's mind. What are they looking at? Everyone's going with, of course, a no-action policy and no change in stance. But the other things that they will watch out for, and that would be the inflation numbers. You have to up the inflation numbers because no one expected 200 rupees per kilo for tomatoes. And in fact, it's become a generalized vegetable inflation. So this is what we should be watching. The second quarter FY24, that's going on now, July, August, September, was originally forecast by the Reserve Bank at 5.2%. But for July itself, we are going to get a 6.8% general inflation. Vegetable inflation will be 9%. As well, August as well, a lot of it has been carried forward. So at least a 6% headline inflation in August is likely. So the average for July, August, September will have to be upped from 5.2 to 6 point something, or maybe 6%. The second half, starting from October to March, at the moment the RBI has forecasted at 5.3. Because the base has shifted up, the index number, they may have to up it to probably 5.4, 5.5. But more important is Q1 next year, the April, May, June number. Because RBI is always setting the interest rate looking at the year ahead inflation. That also may have to be upped a bit, 4.7 or something. This is what the market will watch out for. How worried are they about this latter inflation numbers? And if the numbers come much more than what the street is prepared for, it will be treated as hawkish. That would be one thing they'll watch. And the other thing they'll watch is his language. That is really the most important. Does the RBI governor say that food inflation can become generalized inflation? Or giving any hint towards it? Or does he says that we will look through because this is transient inflation? It's only created by supply disruptions. That would be the most important thing, and how much he emphasizes that we want to align the policy to the 4% target. If there's too much emphasis on that, would be treated as hawkish. And plus, the important point is how are the markets looking at it? Markets have already factored this hawkishness. If you looked at the swap market as of yesterday, I'm not very sure today, they had put in a 50% chance of a rate hike by December. I mean, it is that level of hawkishness that is already in the swap price. Therefore, if he were to just sound a bit more hawkish than expected, I think the markets will actually rally. The yields may even slip a bit.
If he sounds more hawkish than expected?
If he sounds more hawkish than expected, then they may not.
Yeah.
But if he sounds hawkish, that is in the price.
That's in the price.
But the point is, what you all said earlier today when you all started the conversation, this is a one-day affair. Even if he is more hawkish than expected, because tomorrow, tonight is the US inflation number, which is, setting the tone for the dollar itself. Therefore, even if you go ultra hawkish, you will have one eye on how the US markets pre-market rates are. As well, if it is just a little more hawkish than expected, it may only be a 1 hour impact.
I have a question because something I heard in a global US show where they're saying that now everyone's veering towards a rate cutting cycle, right? At some point in time that will come. So with US central banks looking at that, at any point is there a rate cutting cycle that we are staring at as well?
At any point there is.
In the next life.
It is definitely not this fiscal.
Okay.
The way in which the numbers have come out, if you have to increase even the current fiscal, that is second half of this year, up from 5.3 to 5.5, where are you near 4%? Definitely till April, you should not.
Okay.
April, provided this food inflation turns out to be very transient and the Fed turns dovish. But, I don't think there are too many. The majority view in the US also is not expecting a Fed softening up until April next year or March next year.
Probably is a best
It is
case
a long
scenario.
pause. So I don't think cut is something we should talk about at all when we are talking about inflation at 6.5%. MPC's mandate is 6. When you're out of your mandate, you have no question of a cut. The question we should really be wondering is, does he hint about a hike?
Yeah.
I would worry about
Exactly.
that.
Yeah,
That's
absolutely.
the worry.
I'm watching out for the Hawks more than
Okay,
the...
just a word more. If it is a hike, which it is not, there's definitely no hike now, banks gain. Because then they can push up their lending rates. But if only yields go up and there's no hike, banks lose. Because the government securities they're holding will become cheaper.
All right, Latha, thanks a lot for that. We have a long day to go, so we'll let you go on that note. Let's slip into a quick break. On the other side, our list of top 10 stocks coming up. Stay tuned.